Good day, YouTube. This is Jay Money with Falling Forward Financial. Just another oil stock video here. I just did one on Chevron. I actually sold some Chevron this morning at 140. I noticed some money in my account and wondered where it came from, and I had put in an order about a week or so ago to sell a couple shares of Chevron just to see if it hit at $140.11, and it filled. So put in another order today to sell some more at 141, so we'll see if it hits it. But last I looked, it was at 135. So but this is two high yield oil stocks to buy as crude prices surge towards $100. And as you can see, this is just 9 hours ago. So West Texas Intermediate crude oil prices, the U.S. benchmark has surged past 98 per barrel on Thursday morning as Russia-Ukraine tensions escalated. That puts oil within a striking distance of the framed $100 per barrel threshold, a mark that was last achieved in 2014 and many thought oil would never get to again. And here we are. Devon Energy, DVN, and Chevron CVX are two of the top oil stocks that are benefiting from the rising crude prices. Here's why both companies could keep performing well even if oil and gas prices eventually fall from these levels. So one can only hope, so I'm going to keep selling off my shares because everything's going towards EV, and whether that's right or wrong, I'd just be happy to get rid of some of these. They just haven't produced a return that I want. Would have done better having my money in Apple, even though these do have a decent dividend. But higher oil prices pay immediate dividends, and Devon Energy, oil producer Devon Energy, launched an innovative framework last year so that its investors could immediately benefit from higher oil prices, and initiated an industry-first fixed plus variable dividend program that pays a flat-based payment each quarter. It supplements that with a variable dividend funded by its excess cash. Devon's variable dividend framework sees it pay up to 50% of excess free cash each quarter after covering its fixed payment and capital program. These payments have steadily risen along with oil prices. In 2021, Devon paid a fixed quarterly dividend of 11 cents per share. In addition, it made variable payments of 19, 23, 38, and 73 cents per share. All told, Devon paid $1.97 per share in dividends last year. So not too bad. So you'd have to do the math on how many shares you'd have to live off of that. But I like to diversify and get into some other stocks instead of just oil stocks. So with oil prices continuing to rise, Devon is on track to pay even more dividends in 2022. Has already boosted its fixed quarterly payment by 45% to 16 cents per share. On top of that, it declared a variable dividend of 84 cents per share for the first quarter, pushing the total payout to $1 per share. That rate implies more than 7% dividend yield at Devon's current stock price. However, given Devon's framework, it will pay even bigger gusher of dividends as crude prices surge toward $100 a barrel. The ability to immediately cash in on the higher oil prices makes Devon a great oil stock to buy in anticipation that oil will barrel toward the triple digits. And so the dividend aristocrat is prepared for higher or lower oil prices. Next is Chevron. No one knows how high oil or gas prices will go or when they will start to fall, but one thing they do know is Chevron is well positioned to be free cash flow positive, even if oil is in the low $40 barrel range. So I wish it was back to $40 a barrel. We'll see. Currently double that, and hopefully it don't triple that. Chevron's advantageous market position limited losses when oil and gas prices crashed in 2020, and it's a position that boosts Chevron margins during boom times like what we are experiencing now. On its Q4 2021 earnings call, Chevron CEO Michael Wirth said in the following in response to a $90 plus oil and gas market: "There's a lot of resources out there that can be produced economically at prices lower than what we see today. Last year, there was a 25% higher than the best year in their history, so we increased the dividend. Debt came down significantly, and we guided the high end of our share repurchase range. While I agree Devon Energy is an excellent upstream exploration and production company worth considering now, I think a safer option for most investors is to simply go with Chevron. Chevron is a dividend aristocrat and an S&P 500 component that has paid and raised its dividend for at least 25 consecutive years. Chevron has done it for the last 35 years. Wow. So I would say excluding the last 5 or so years, 30 years of that was excellent in paying dividends, and it's probably kind of tapered off since then in the last 5 years, since everything's going towards EV, solar, and stuff like that, so less need for gas, but there's still a lot of cars out there that need oil and gas, so even if oil and gas prices fall, Devon Energy and Chevron could be great buys for income investors. Investing in equal parts of each stock would give an investor an average dividend yield of 4.7, which is a sizable passive income stream, and as long as the oil and gas industry continues to be one of the primary causes of inflation, both companies will have the pricing power needed to combat higher prices or higher costs. So I'll just have to wait and see on this one. I just thought it was an interesting article, and since I just did one on Chevron, this one has Devon as well. So if you either have a DVN or CVX, you can go ahead and list that in the comments, or if you have ExxonMobil or BP or any other oil companies out there, that would be interesting as well. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.